Okay. Sir, there's a GC right there, Cliff.
Go.
It's piers. We got concrete piers and wood piers.
Yes, sir.
Checklist. Let's check out the checklist.
Yes,
We got it for everything we need.
Yes, sir.
You forget some things sometimes. So this is going to outline, make sure you hit every single thing. What's the foundation, plumbing, electric, painting, flooring, everything. So you don't miss anything.
Okay.
You want to make sure you get all your checks.
Okay. I want to introduce you guys to Cliff Hunter. Cliff is a world-renowned flipper. He actually flips. He's also a GC as well. He's a good contractor. When it comes to all of our renovations, all over the nation, you'll talk to this guy right here.
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, y'all? It's your partner Dale and Cliff. Back in the saddle again for another edition of, we call it the Investor's Edge, but it's also otherwise known as Real Estate Friday Live. Cliff, how you doing, big time? You doing all right, big dog?
Man, yeah, doing good.
Good. You know, I ask the question every time, did we get the bag?
Oh, yeah, got the bag this week, man. Doing nice.
Yeah, we did, man. We got the bag a little bit this way. It had a little bit of some challenges here and there, guys. But it is what it is. And guys, I didn't say this on last night's podcast, but forgive me, guys, for abruptly getting off the podcast last Thursday. My grandma passed away live while I was actually on the podcast. And so when Mama texts you 911, you get off and see what's going on. And she let me know while I was on the podcast, my grandmother died. She was 90 years old, lived a great life. But I'll be at a funeral tomorrow. I'm actually in the funeral tomorrow, so I'll be out of town. But guys, man, we're gonna get right to it, man. If you guys can do us a favor, guys, like, share, and subscribe, guys. If there's a little bell there on the platform that you're on, hit that thing for us, guys. So when Cliff and I come live, come kick it with us, man. Come holler at us a little bit, man. Give us some wisdom. We may even bring you on. We're thinking about maybe even having a call-in line, maybe. So you can get in and talk a little bit, and we may even share the stream so you can come on as well. Also, onto the screen with us. We can talk business, talk about real estate, guys. But Cliff, man, we haven't did a current market analysis in a long period of time. Cliff.
Yeah, it's been a minute.
It's been a minute. Cliff, man, y'all, this is a licensed appraiser on the screen, an investor, right? And you have a private equity investor, banker, right? And invest in real estate on the screen. Cliff, your boots on the ground when it comes to appraising commercial and residential. What you seeing in the market right now? What's going down?
Man, we saw interest rates spike this week. That had something to do with the oil prices. We're also seeing a decrease in demand across the board. Starting to see some cracks actually in the real estate market. Days on market are actually starting to go up. I'm starting to see them creep. And you're actually seeing to see prices come down in a lot of areas too. So we're seeing everything kind of come across the board in 3 different areas. That's really sliding the market. If you're a buyer right now, it's a great opportunity to step in and buy something at a discount, because you know when you have a property that's been sitting on the market for 90, 180 days, they're going to be more likely to sell. Additionally, we're still seeing inventory is low. People who are in those low interest loans, they don't want to sell. They're going to stick to them.
Sure.
As long as we see interest rates still stay above 6%, and it's staying strong above 6%. It's been a couple of years now. I don't think we're going to see a lot of change in the market. I know people are complaining because what's happening is because there's not a lot of houses up for sale, rent prices are actually increasing. That's the other side of it. So we're starting to see rent prices start to creep up because there's just not that inventory. Where people will kind of absorb it, buying new homes and some movement. It's just not happening as much. And so Man, I don't know it's hard for me to actually project the future at this point because we're in such a unique position right now that I don't think we're going to get out of anytime soon. So you're probably going to see this continue for another 12 to 18 months at least.
No, that's called stagnation, guys.
Yeah.
That's called stagnation. Okay?
Right.
It's not, this war in Iran is not doing us any type of favors as well also on the global stage. It's not. Is actually causing a lot of the spike in oil pricing, which is causing a lot of spike in the interest rates. You see how the interest rates are tied to the oil market. Everything's tied to the petrodollar. Everything is, guys. It is. So I agree with Cliff. There's a lot of properties on the market. I'm seeing properties, Cliff, on the market in affluent areas on the market for 160 plus days. Easy. And you have some stubborn sellers that do not want to lower their price point, be comfortable with sitting on that property for a long period of time.
Exactly. And I'll give you an example. I literally have both my neighbors have tried to sell their home. Neither one sold. They had to come back in and renovate the property. And then may get a little price increase, maybe. But that tells you something. I literally had both my neighbors not be able to sell their property, sitting on the market over 100 days. So They had to pull it off and renovate the whole property to try to find a buyer.
Wow, y'all. Now, this seems like a lot of doom and gloom, but just wait till the end of the show. It is not. For those that are ready, baby, this is an opportunity for your lifetime. I believe, Cliff, for the next 12 to 24 to 36 months, those that are ready are going to make a boatload of capital, a boatload of money. This is the biggest wealth shift in my lifetime. And I'm 46 years old. My lifetime. I ain't never seen anything like this. Have you, Cliff?
Nah, nothing like this. This is stagflation. I don't know what stagflation, but it's getting that feeling, right? We're getting that feeling like something like it. Nah, I've never seen like this. I mean, you got to understand what happened before this, because during COVID, we had inflation, and a little bit after that, where prices were going crazy. I had a mentor who, when I was doing my appraising, said he hasn't seen inflation. He hasn't had to use the checkbox, which marks inflation on the appraisal form, in 20 years.
Yeah.
And he had to use it during COVID. Then we had what's going on now. It's just the last 7 years have just been unique.
Yes. And guys, news flash. It does not matter who's in the executive branch. It's what happened under Biden or Trump or Harris or Bush or Clinton. Why? Because the U.S. government will not stop spending money. It's that simple. It's not hard, guys. Simple, guys. Simple. The federal government should not be a player in the game. They should be the referee of the game. And the problem is that they try to play the game and they suck at it. They suck at playing the game. If you agree, man, you disagree.
Yeah, I mean, at the end of the day, to me, it's an easy measurement if they want to play. What's the best thing you've done?
Yeah.
Ooh. What's the best thing you've done? And if you look at it, you look at that top one, let's say top three, the best things the government has done for you, and you realize all three are failing, why would you give them more money and more capital unless they cleaned up what they've already messed up?
Wow. Again, guys, that's the current market analysis, guys, what's going on here. And this is just what's in Dallas, Texas, just in Texas. The same thing's happening in Florida, Oklahoma, every state is going through this. I feel sorry for New York and California. I feel sorry for y'all. It's just not. It's just that most areas are just. I feel sorry for y'all, man. I really do. But all right, Cliff, let's dive into our topics today, man. Hey, guys, today's topics, very quickly, guys. Hey, there's a new home big discounts. Properties on the market are demanding big discounts, as Cliff talked about. Number 2, home builders are struggling to move inventory. I know, because me and my wife were looking for a new crib to buy, and we went to new construction. We're going to talk about that as well. Also, number 3, guys, Western Union, guys, they entering crypto. Yeah. What you say, Chuck? Western Union, baby. And then we're going to talk about what you should be investing in today's market. All right, guys. Well, Cliff, man, let's dive into this first topic, man, real quick, guys. First one is Man, the housing shift nobody's talking about. Why new home sales are slowing and inventory is building. Is that the one I want to go to first? Yes, that's the one. Yes. No, my bad. First one, my bad. First one. Biggest discount since 2008. I'm spelling 2008. I'm spelling it, guys. Are we heading into a housing correction? Let's bring in our guys from the Reventure app, guys, real quickly here to talk to what's going on, guys. Here is we love his platform because he talks about facts, data, numbers. All right, let's move him over real fast. Come on, there we go. Let's move him over real fast. What are we doing? Hold on, y'all. There we go. All right, here we go, guys. Here he is. Let's see what's up. Here you go.
Home buyer demand just experienced its biggest crash since 2009, a signal that the 2026 housing market could see even bigger price cuts. And if you're a buyer or an investor, now is the time to start getting into the market, because this buyer crash is leading to some big discounts on properties. The National Association of Realtors released their February 2026 existing home sales report. They said 4.09 million existing annualized sales in February. That was the worst sales volume for the month of February going back all the way to 2009, and it was the second worst in the last 30 years. So this home buyer strike that I've been talking to you guys about for the last 6 months, I've been telling you it's going to keep getting worse. It continues to get worse. The demand continues to, new data from Redfin is showing that pending sales are also down 1% year over year, and Reventure's home buyer demand index is now at a 9 out of 100, one of the lowest levels of all time. And why this is important to understand is not just me being negative on the housing market, it's me telling you the truth about what's going on. There's a lot of entities out there that are trying to spin a false narrative of a house market recovery. The Wall Street Journal reported on this same data, and their headline was that February home sales rose. Meanwhile, Reuters reported that U.S. existing home sales unexpectedly increased, while Barron's is saying first-time home buyers are returning to the market. And this is shocking, everyone, that we're seeing a complete collapse in buyer demand. Yet these mainstreams are printing headlines saying that demand is recovering. I've seen this happen before over the last couple of years, but this is one of the most egregious times I've seen it happen, because what these headlines should have said is lowest buyer demand since 2009. It should have been more or less the headline to this video, but I think some segments, I'm just speculating here, everyone, and this is just my opinion, I think some segments of the housing market reporting infrastructure might be trying to trick you into thinking there's a recovery occurring.
So Cliff, real fast, man, real fast, because he goes in a little bit deeper. Real fast. Concerning what's going on here, number one, why do you think these mainstream outlets are essentially lying about what's going on?
I think that it's the picture that they try to paint, right? So for them, I think they're looking, because there are some stats you could pay attention to say, oh, you know, there are sales, there are things going on, and depends what market you're talking about. Because you do have some markets, like I had one, a house this week that is a good example. It's $1 million property that I had to appraise, sold 3 days on market, right?
Wow, 3 days on
3
market.
days on market, and it was not fixed up. I'm talking about average condition, you know, it needs work. $1 million sale. So you could take points like that.
Really?
Yeah. Yep.
Wow. Okay.
And I see those from time to time. So there are those situations where it's not meeting what you see in terms of the information. And a lot of times it's going to depend on the companies that are actually tied directly to what the real estate market is doing. They need to have that public opinion to say it's optimistic. Right. Yeah. But what the truth is, when I even looked it up, and I wanted to double check it too. Here's a data point for y'all. All y'all love stats and stuff like that, like me. You know, I'm an appraiser, so I like that information and the number.
Yes, sir. Yes, sir.
Nearly half. I'm gonna repeat that. Nearly half of all real estate agents sold no or one house in the past year.
Say that again for the folk in the back row.
Half of all real estate agents sold one or zero properties in the past year.
Jeez. That's not good at all, Cliff. At all, bro. That's not good at all.
It-
One house?
We have hit a unique situation where prices are high, interest rates are high, and people are broke.
I remember, Cliff, I told everybody, I said, guys, people kept telling me it's going to rebound. I was like, guys, you're missing the point. People manufactured pay raises by borrowing more credit card debt. We had a record high credit card debt in the U.S., which drove up their debt to income ratio, which makes them unbankable. Even you actually had the Biden administration and the Trump administration trying to revise the DTI standards up, and it still didn't work because people can't afford the higher payment because of the interest rate. This is what's going on, guys. This is what's going on. This is crazy time, Cliff. What do you think, bro?
Man, I think we may not see recovery for a while. I think you were right when you were looking at the consumer data. Basically, credit cards, loans, stuff like that. It's high. It's at an all-time high. I think, if I can remember correctly, student loan debt topped $1 trillion. Credit card debt topped $1 trillion in debt.
Yep.
You got to remember that the average between those two is about 15 to 18% interest rate.
Correct.
So that's draining. Think about the
Correct.
interest payments on that. That's what $180 billion in payments coming out the system, just going to different issuers. So, man, yeah, it's gonna get crazy.
Now, guys, that's not it, guys. Something's happening also real quickly, guys, with the new home sales. The housing shift nobody's talking about. No one's talking about these new home sales, these home builders building properties that are vacant. They're vacant because they have to put their money to work. Why new home sales are slowing and inventory is building up? Cliff, we were looking at buying a new home, and we still may do that. Here's the problem, though, Cliff. We looked at a local builder here, a well-known builder. They were trying to sell us 3 homes. Cliff, this is what they said when we walked into the office. Give us the price. Give us the price. Not here's the price. Give us the price. What do you want to buy it at? They're offering $30,000 in closing costs, credits, and on down payments, and it may go even higher. This is what's going on, guys. This is crazy, Cliff. Crazy, Doc. Are you seeing the same thing out there in the market, B-Dog?
Yeah, it's like I said, it's a slow market. It's the slowest market I've seen, man, in a long time. And we out in Dallas. We in probably top 3
correct
cities in America, maybe behind Miami.
Correct.
You know what I'm saying?
Correct.
And
Correct.
we're starting to see it here. So that tells you in a worse market, they really feel it. They really feeling it.
Really?
And so what you can do is you could track what's going on in the market with the stocks, right? That's going to tell you about your P&Ls and what's going on. And so right now I'm actually looking at what's going on with the Zillow, and Zillow's down. Let's see. On the year, I bet you're not going to guess this. Zillow, Dale, why don't you give me one? Give me a guess real quick. How much do you think Zillow is down in the past since the beginning of the year?
40%.
Man, you hit it right on the money. 40%.
40%, guys. That was a guess, but I guessed it missed it. I guessed it high because of the market. Zillow's normally always wrong. I mean, I don't trust them Bamas at all when it comes to values, rental rates. Nope. Nope. So that's why I guess it made it high, and I was right. 40%.
Wow. In the past 5 years, Zillow was down 70%.
Jeez.
And that's Zillow. That should be a guaranteed moneymaker.
Yes, it should be. Guys, this was going on. Now let's bring in a guy from Revenge of App again talking about this, and I have maybe a solution that Trump's trying to do on this, Cliff, that I want us to respond to. Is this the one I want to look at? Yeah, it is. All right, let's get to it, guys. Here we go.
Home builders just sent a massive warning to the US housing market, and the no housing crash crowd is not liking this. According to a Realtor.com news report, new home sales just had their biggest drop in 13 years. There's now 9.7 months of supply on home builder lots. That's the highest we've seen more or less since the last crash. And now builders are cutting prices at aggressive levels. Lennar, the second biggest builder in America, they just announced that they've cut prices 25% from peak on new deliveries. Their net price has gone down from $491,000 in 2022 to $370,000 in 2026. This is a full-on 2008 style correction going on right now in the home builder market. And the thing that's crazy about it is no one's paying attention. There's so many people in real estate who still say there is no crash, there is no downturn, yet some of the biggest builders in America are issuing massive warnings that you all need to be paying attention to. And I just want to give you guys this data so you understand what's going on. In January 2026, there were 587,000 seasonally adjusted annualized builder sales. In the previous month in December, there was 712,000, so you could see that huge drop. But more concerningly, when you look at the 10-year chart, you can see that the sales volume in January was actually kind of below where it was prior to the pandemic. When you mix that low demand to buy in builder lots in January with the sky-high supply that they have, you get 9.7 months of supply on the market. That months of supply is more or less at the highest rate since the last crash. It's at an unprecedentedly high rate. And you can see here, I'm walking around a home builder site in Georgia. This is D.R. Horton's site. D.R. Horton is America's biggest builder. They're number one. Lennar is number two, although Lennar is starting to close the gap a little bit. You can see there's a lot of homes recently completed here. There's also more homes under construction. And I believe we're seeing this builder price downturn and this builder deflation hit where I'm standing right now. Folks, some of these houses are actually getting pretty affordable. I want you to take a look at some of these listings and let me know what you think. We have some of these homes on the market, 5-bed, 3-bath, 2,800 square feet for $360,000. That's $129 a foot to buy a 5-bed, 3-bath house. Now we're here in Dalton, Georgia, which is between Atlanta and Chattanooga.
Yeah, that's Georgia, man. Come on, bro. That's Georgia, man. We've been up there before, Cliff. We know what's going on.
Them Georgia prices be crazy, man. You want to move to some place again. But that's what I'm saying. But that's a good example when they say it's unaffordable. Things are unaffordable. My question is, where? Where are they unaffordable? If you're trying to live in New York, it's going to be unaffordable. You in Manhattan. But if you move to Dalton, like he just said, you can get prices like that.
You sure can, guys. And just can I give you a little example? Again, Cliff, what I saw with this Texas builder is I kind of noticed that they have been building properties. And I'm like, okay, no problem. I'm assuming they were getting sold. No, they're vacant. One has 2 stories, one has 1 story. And these houses are gorgeous. Gorgeous. They want like between 1.4 to 1.6 million. And I was like, hell no, I ain't paying that. No. So Cliff, they sit down and say, hey, and I ain't never seen them so thirsty. Thirsty. And they were like, give us a price. Let's negotiate. And I'm like, what? A lady bought a Pulte home in Princeton, Texas, Cliff. Princeton, brand new. And I believe they gave her a washer and dryer and refrigerator. Right? Cliff, 2,400 square feet. Anybody lived there, boy, that couldn't sell it, Cliff? You know how much she brought to the table for the entire deal? $11,000. She stole the house. Stole it. And her rate, 3%. Oh. Stole it. Stole that house. And I said, God dang. They gave her the ranch. The ranch for the house. And she's loving it. Yeah. She's loving
what's going on right now, man. It's a crazy market.
Crazy market. Now, Cliff, real quickly. This is something new, guys. I want you to look at something real fast, Cliff. And there is someone believes that you could probably, this is Trump's plan to potentially turn the real estate market around. All right. I want to bring us up with him. I'm gonna move. That's not how I want to do it. Damn it. Here we go. Here now, Cliff. Listen to what he has to say. This is saying that the Japan market. Can I make it bigger? I can. Look at that, God. I can make it bigger. Let's see here, guys. I'll move me over. It's fine. Here in the middle, Cliff. Listen to what this guy says, Cliff. This is what he's saying. Listen to what he says. Here you go.
Trump may have just found a way to fix the housing crisis in a very unorthodox way, and it all has to do with Japan's money. What if I told you that mortgage rates could drop based on what's happening in Japan right now? Yeah, because Japan is having a huge money problem that could impact mortgage rates here in the United States. So here's what's going on. The Japanese yen is getting absolutely crushed right now. This is the 5-year chart. You can see it is not doing well. And big investors, what they'll do is they'll come in and they'll borrow yen because it's so cheap. And they'll use that yen to buy US bonds, because essentially what you're doing is you're borrowing cheap currency and getting a stronger currency in return. This is called the yen carry trade. So let me show you how this works visually. Keep in mind you can do this with any currency, but essentially you're borrowing a currency with a lower interest rate. So in this case, it would be yen. Then you're exchanging it for US dollars, which has a higher value. And then you're depositing that money into bonds, which get a high yield. So it's a guaranteed rate of return. So you're borrowing a currency at a low interest rate. You're getting a high rate of return for the money invested into US bonds. And basically you're getting free money because of that carryover. But now here's the interesting part. The Japanese bond market is absolutely collapsing right now. So what do? In order to entice more investors to buy up these bonds, they raise interest rates. So Japan is going to start raising their bond interest rates, which means they're more attractive. So US bonds are probably going to get sold off and Japanese bonds are probably going to get bought. And what we can see is because of this, global markets have become really uncertain and unpredictable. So what Trump and the Treasury is likely to do in this scenario in order to stabilize global bond markets is they could just come in and buy up a bunch of Japanese Treasury bonds. That way the markets calm a little bit and interest rates don't go haywire. So essentially what you have is a weak yen that's caused by a debt crisis happening in Japan. And what this has done is thrown the global bond market completely in chaos. And a global bond market is bad for every country, not just the United States. So how could all of this be prevented? The United States could just come in and say, hey, Japan, you're our allies. We want to help stabilize your country and your currency. So we'll just buy up a bunch of those bonds for you. And that actually would be the best case scenario for the housing market, because we don't want to see the global bond market completely collapse.
So Cliff, man, what do you think about that presentation?
Man, it's smart. That's what the big boys do. They play global games where you can borrow cheap, because we're all used to the United States. But if you can go to another country that has a little, sophistication in terms of their banking system, like Japan, and a lot of other places too, Argentina, if you're willing to play those games and be a little bit more risky, they give great returns in other countries because they're riskier.
Yeah.
You come back to the United States where you can borrow really cheap, come to the United States, get a 5-6% yield, and you didn't do nothing.
Yep.
And banks do this all the time with about 5% of their money, and they're just spitting off profits. So that's smart. It's very smart, and it's an interesting take because a lot of investors go with the Japanese yen.
Makes sense. So do you believe that it could actually positively affect the economy, the real estate
Not
market?
enough, because the United States, the economy, especially the real estate market, it's too big. It's too big.
Huge.
It's the largest asset by far. It's the land. This is by far the largest asset. So you're not really. The only thing that's going to change anything is debt to income ratios, and interest rates. Those are the only two factors that are going to cause 70%. You know what Trump's trying to do, and what they're trying to manufacture better conditions. That may help 10, maybe 15%, but you're not going to hit the bulk.
No, you're not at all. I kind of agree. I hear what he's trying to do. And he's trying to really squeeze a lemon. He's trying to really do anything he can to be able to make things actually look a little better. I agree with you. It's not going to be enough at all. You may see a little bit of some calming going on in the market, but to be honest with you, they ain't gonna have nobody. It's not. How's it gonna bring people off the sidelines to go out and begin buying new properties if they're having to borrow at the high interest rate, Cliff? I don't know about you. I'm not going from a 2% rate to a 7% rate. Would you?
Yes, man. No. Especially when you're going to a high, because if you're moving, you're moving up most of the time. And so if you have let's say the average in the market, say it's 400,000. If you have that at 3%, 4%, you're gonna move up to a $600,000 house at 6%. It's numbers don't work.
It don't work, guys, and that's the problem that I see Trump is going to have with this whole economy. It's how do you get the average American off the sidelines to begin to spend money without lowering the rates? Now, do you think the Fed chairman is going to lower the rates? The new one coming in?
Not at first. I've been watching a little bit what he's doing and what he's talked about in the past, and what he's going to do is not going to be a dramatic drop in interest rates, because his philosophy is you can drop interest rates real low if you have a low balance sheet. Agreed. So if he's going to try to lower the balance sheet, then he's going to be soaking up money taking up money out the system.
Correct.
To then try to lower it, but that's going to offset.
But couldn't they just move that debt over to the digital space, as far as the bonds and the government treasuries to digital space, effectively doing modern monetary theory to alleviate some of that pressure, so they can begin to maybe lower rates here and there, to kind of a combination type of scenario, blending crypto or digital with the lending component?
No, not with crypto. Because so what crypto is going to do, it basically, to me, it does two different things, right? One is it opens up the world to the US dollar in a way that there haven't been. Because right now, if you're in a foreign country and you want the US dollar, you got to go to a foreign exchange. And if you're doing it, and if you happen to be able to do it online, it's kind of convoluted to do so in bank. Being able to do it on crypto is easy. You can click a button and immediately your money becomes USD. Easy. There isn't this intermediary. It automatically does it. So what that's going to do is that's going to bring demand for the US Treasury. So you're going to have demand come in from all the world being like, we don't want our country's currency. And it's going to force other countries to really focus on the US dollar even more. So it solidifies our dominance in that aspect. And what it's also going to do is increase transactions. You're going to see transactions increase because it's so easy. Now that could bring down interest rates just because of the demand for the treasury, the treasury bond. But outside of that, it's not going to do much.
It's not, guys. I'm just keeping 1,000 with you, and just keeping 100 with you, guys. We in some trouble. We're in some trouble. If you're a retail buyer, you're in some trouble. It's trouble. You really are. Really are. But man, guys, let's go to that last thing, guys, real quickly here. Man, this is Cliff's wheelhouse. Western Union, guys, has entered the crypto space. They have. Why this is a bigger deal than most people realize. Again, Western Union is not a small fry. They big time. And now they're in the crypto space. Let's bring them on real quickly so they can talk about why they got the crypto, and so we can kind of analyze it. Here we go. Let's get into it.
Well, in some other news, NYSE-listed Western Union announced plans to launch a new stable coin, the U.S. dollar payment token, which will be built on the Solana platform. The Solana Foundation's GM of payments, Shiraj Sher, was at Money 2020 USA in Las Vegas and told Remy Blair why this development is so significant. Let's take a look.
I mean, it was great to see Western Union has selected Solana and Anchorage to issue their own stablecoin. I mean, Solana has always been about being the fastest, cheapest, and most scalable infrastructure. For the future of payments and finance on chain, it has to be infrastructure that works that way. And it's exciting to see Western Union, along with many other big payments players, start to come on board. So we're really getting this coalescence of this economy of payments on chain. So companies like Fiserv, PayPal, Visa, et cetera.
And I think when we think about blockchain, we know that speed and cost are always top of mind. So tell us how Solana actually delivers on this.
Yeah, so that has been the North Star of the Solana blockchain. The founder worked at Qualcomm. He knew all about building scalable distributed systems. So Bitcoin was the original blockchain, incredible innovation, but Bitcoin is digital gold, right? It's not good for payments. Ethereum came around, incredible blockchain, but it doesn't scale, right? 10, 12 transactions per second. So the founders of Solana really thought we need to build, if we want the future of finance on chain, we need infrastructure that works at the speed of finance, right? So today we have 100,000 transactions per second, soon to be 1 million in terms of throughput. Settlement happens in 400 milliseconds, and each transaction costs a fraction of a cent, 1,000th of a cent to send an asset from one account to another. So that's really the infrastructure. The engineers who built the protocol understood that that's what you need for finance on chain.
Cliff, bruh, that's a lot of transactions at a high speed, at a fraction of the cost that it would cost for banks to do that for you. Did I hear that Did I hear the right thing?
Right. Yeah. So I mean, you're basically going to have at least 1,000th of a cent to be able to send your money. So you can think of transaction costs are gone.
Jeez.
You know, it's going to change everything, and especially that's going to open up globally. So now you're going to have global companies that are going to be crypto based. That now for you to be able to transact in Germany, England, France, Uganda, Somalia, all that kind of stuff is going to be easy, and they're all going to use the US dollar. That's what's going to end up happening.
God damn.
Right. We are going to see the financing of everything. What I mean by that is to say, like another example is this poly market. You probably have heard of poly market, where you can make bets on everything. If it's going to rain tomorrow, you can make a bet on it. Did you know you can only trade in crypto on that platform?
No,
you can
what?
Only trade in Bitcoin. And I think it's Bitcoin, but I think it's mainly crypto. You can only trade in crypto. You have to connect, you have to send your money in via crypto.
Whoa! Have you seen this real estate services company, Better Home and Finance Holding Company, plans to roll out crypto-backed mortgages in the next 3 months in partnership with Coinbase. This is crazy town. In a good way. In a good way. Cliff, how is that so significant from a lending and banking standpoint?
So it's going to be able to be a simpler way for companies to be able to manage what's on their chain, because you think of crypto as a ledger. It's an accounting tool. What it does is it can verify and can show you everything on the chain. So that's the other part about it is it's going to be in a way very transparent, because every transaction on the network, Bitcoin, Ethereum, you can see it. I can see it.
Jeez.
Everybody can see the transactions that are taking place. So that is going to happen across the board in every asset. So what's going to end up happening, if you are not a day trader, a swing trader, if you are not someone who deals in transactions on an electronic level, you will get left behind, because that's where everything is going. Everything is going to become transactional, online, and making money in those kind of ways. When you see the market move, people are making money because they're in those deals, and then they're into another deal the next day, next week.
Jeez.
If you're sitting and watching it, the S&P to me is going to get left behind by more diverse and unique assets. So I think, to me, matter of fact, I'm just thinking of it, the smartest approach to this that could be is probably building portfolios for other people, because you don't need to be licensed in crypto to do that. If you were going to do it for a bank, or you're going to do it for a financial system on stocks, you need a license. Not for crypto. I can tell you to buy Solana. I can tell you to buy that. Now, do your own homework. It's not financial advice. But I can say that from my opinion, I believe that to be a good stock or a good asset for you to buy. And you can start building out assets and portfolios under, reduced licensing, at least as of right now.
Correct. Cliff, do you guys now see what Cliff talked about? Tokenization of rental payments, of rents. It's because of the speed of cash. I mean, the speed of transactions, the speed of leveraging. We're in a debt-based system. So if you can put a system in place like crypto, that you can maximally leverage at a fast amount of time for a lesser cost than dealing with the banks. What sounds better, Cliff? Your crypto or the banks? Crypto does. It's real simple. Versus, put it like this, Cliff. When we go buy a house, we're spending about probably 3 to 5% in closing costs, right? 3 to 5%, 30 to 45 days to close, right? Right. With Cliff, if crypto was doing the transaction, how fast we got? What's the time frame that it would close?
I mean, it would speed up. It would speed up a lot. They're trying, and that's a good point, because that's what's happening now. Is they're trying to get down closing a house under basically under 14 days.
Jeez.
That's me from hearing that from the banks, where they're trying to speed up the appraisals. They're trying to get us to 3 days. 3-day turnaround times while keeping accuracy. So, wow. And I'll give you a little insight. The banks are looking for any reason to get rid of appraisers or anybody. I'm talking about title companies. They want to get rid of them. They're talking about bringing in agents. The banks are agent title companies. So where it's basically an AI, because the AI can do all the paperwork. It can scan for all the background, scan the title. They can do all of that, and the banks are looking to basically have AI title companies, and everybody sends their paperwork in.
Golly, jeez,
right.
A buddy of mine. He's actually he works for a bank, right? He's one of the head guys at the bank, and they use AI to draft their legal documents now. AI. They fired like 80% of their people. 80%. Crazy, Cliff.
I mean,
crazy.
Think about it. If you're a law office, Dale, why do you need a paralegal when you got AI?
Exactly.
You don't need that person who just kind of does a little bit of, hey, can you do this for me? This little I'm good enough. What you're going to end up seeing is the people who use AI the most, and I want to make this point to everybody, because this is what I'm doing. So I'm telling you I'm putting y'all game with what I'm doing. So I was listening to the CEO of NVIDIA, and this is what he told his star employees. If you are not using AI to do everything, he said, I have engineers I pay $500,000 a year salary. I told them, in your yearly review, if you are not spending $250,000 a year on your personal AI use, I'm going to be pissed.
God,
me, the top companies are using more AI, and they're incentivizing their team to use more of it. And that's what I'm doing too. I'm moving everything over to an AI-based way to operate my business, operate my company, everything, because it's going to scale at a pace that you just can't keep up with humans.
You cannot. This is how I solved the problem, guys, when it came to appraisal problems. I solved that problem by using AI. Speed, accuracy, putting together an entire package, because I want to take the guesswork out of a licensed appraiser's imagination. I want him to walk in, have all the information he needs. So, oh, that makes sense. That makes sense. Now he's making a good, informed decision based on data, not his imagination. AI solved this problem for me. I'm even looking at using AI to as far as property management. AI. Now, again, you need human capital to manage it, but instead of me hiring a whole property management company, I can hire a VA to do that. VA do it. Am I right, Cliff? Am I wrong, Cliff?
Oh yeah, but most companies are already doing that. They don't know. They've already do. They have a front end probably property manager who has. And I'll tell you this because I know from behind the scenes, a lot of those large property management companies, they have one person managing 1,000 homes. Mm-hmm. And how do you think they're doing that? They're giving them a VA, and now give them AI, and now that person can manage 1,000 homes Doing it that way. So those companies that own 50,000 rentals, that's how they're doing it.
Again, guys, if you're not utilizing AI in your business model, you're 20 years behind. You're gonna get crushed.
And you can get, and if you don't know how to use it, get a developer to build you out apps, because that's the other part that's happening right now too, is, but you're on something else too. What's happening is, because AI is being used so much, let's say you have something specific you want to be able to do and have an app do or AI do. Before, if you went to get a developer, it costs a lot of money to have them develop it. But because AI is here, the developer can develop it faster and cheaper.
Yeah.
So things that you thought would be crazy, $100,000 to build, are now $3,000 to build.
Correct. Again, guys, AI doesn't take breaks. That doesn't need lunch or breakfast or dinner at all. It doesn't get sick. Do you see why companies are moving so much more? I'm seeing, Cliff, I saw a report that AI actually won a legal case. Won a legal case. Outmaneuvered a live attorney. I said, God dang, that's crazy town. But that's what's going on, guys. That's what's going on, man. So again, guys, a lot of they said you were crazy they said you were crazy, but you were not.
So and I'll tell you, the last thing I say is, what I'm doing is, because I know the market is moving into crypto. I knew it's getting more into financials, and the market is going to become more fractionally reserved. Right? There's going to be more money basically moving around. I'm actually building out two different models. One model is finding opportunity, and another model is executing on that opportunity. So it's going to scan the market, and I mean everywhere, looking for opportunity. And then I have another system that knows how to say, hey, based on that opportunity, run an analysis and then execute on it and be consistent.
That's it. I'm doing the same. I'm building the same thing in the real estate investing space, and the mortgage banking space, home inspection space, the appraising space, and the private equity space, guys. All through AI. Pretty soon, I believe for 100%. There's going to be a one-man billionaire that actually is running it. One person running it. One live person running it, and the whole thing is being ran off of AI.
Oh man, I'll tell you this, man. Like, you're 100% right. I saw this week I believe they are all 20. 3 20-year-olds. Their market cap on their company is over $1 billion. 3 20-year-olds using AI. They built their own model. They built their own. What is it? It's a model based off projections that they can prove. It's wild. They are 97% accurate in prediction of markets. Long term. I'm not talking about short term. I'm talking about 2 to 4 years, 97% accurate. And so every company is hiring these 20-year-olds in $1 billion company. There's only 3 of them.
Again, guys, don't sleep on crypto. Don't do it in a leverage-based system, and don't sleep on AI, because if we move over to a digital type of financial system, you better know that AI is going to be running it. It's going to be running it. It's going to be running it, guys. AI is now eliminating white-collar jobs, but it can't eliminate blue-collar jobs, because you're still going to need the electrician. Still gonna need the plumber. You're still gonna need the contractor. Do you see why they're making 6 figures now? Because they cannot be eliminated. With those white collar jobs, yes, sir. Just saying.
Unless you are good at AI, because when they hire, I know if I'm hiring somebody, I'm gonna ask, how good are you at AI? If they say, oh, I can do this and this and that, cool, because you are a one-person marketing team. I can hire you instead of 3 people, because you know how to leverage AI. Correct. If you're just a person, I know how to. No, you got to bring more to it.
Sure do, guys. Man, that is today's topics, guys. We hope. I know we said a lot of information today, guys. Real quickly, it is an honor, guys, to actually have on the screen a licensed appraiser. Cliff is his live. And every single day, boots on the ground in the space, Cliff, man. Cliff, tell them about hunterappraiser.com and what you can kind of offer them, guys.
We just do right now residential commercial appraisals in Texas. Hopefully, we'll be able to expand them beyond that pretty soon. We also do consulting, help somebody else do a portfolio. I think they have 17 houses. We have another guy who's trying to do 59. And so we're working through his opportunity right now. Done large commercial properties as well. Had one that was, about 20 subways, something like that. So if you're looking for appraising, looking for consulting, just reviewing what you're going through, or you have a deal that you just want us to be able to look at, we can go ahead and do that. Just go to hunterappraisal.com and we're going to help you out. Gotcha,
guys. And guys, if you're wanting the free ebook, guys, free distressed property ebook, DM me the word real estate, right? DM me the word real estate. And also what you can do is you can also scan on this QR code real quickly. Let me get this out of the way real fast. This QR code real quickly, because we are changing this. Not so much. We're going to add something to it, right? But it's going to deal with AI, putting together the appraisal package for you guys. All of the prompts, what it should look like. We're going to walk through what it should look like. I'm going to walk you through it, step by step right there. You're going to have all of the prompts to where you can go to every deal with confidence, guys. And Cliff, we're working on something, maybe Cliff. With this, I'll be working on something.
Oh yeah.
We are working on something, guys. We ain't gonna talk about it until it gets done. But we're working on it, guys. It's coming. It's gonna change the game. Cliff, man, you want to say anything, man, before we end, bro?
Nah, just the same thing I've always been saying. You one deal away.
Well, guys, have a good weekend. God bless you. We know we look better than you. Don't get mad at talk just about that thing, guys. But guys, God bless you. See you guys next week, guys. All right, y'all. Peace. What's good, guys? It's your partner Dale here, man. Hey, I always say that when it comes to real estate, I think this is the best time. The next 3 to 5 years is the best time, in my opinion, to begin to invest in real estate. Whether you are a seasoned investor or a novice investor, this is the best time, in my opinion, to invest in real estate. Now, why would I say that? It's very simple. Whenever there is some stagnation within the real estate industry, that's the best time to get deals, right? Deals are what attract the capital, right? A good deal will always attract good capital. Now, what's a good deal? Well, I like buying distressed properties below wholesale. The skill to buying right is learning how to locate distressed properties in your city, county, or state. Now, the good thing about it is we are giving away a free ebook called Distressed Property Investing. We talk about different ways of locating distressed properties in your city, county, state, what to look for, who to call, things of that nature. It is free. Once you master this type of skill of locating distressed properties, you'll never be broke ever again, because good deals attract the right capital. All right, guys. So to get the free ebook, click on the link below, scan on the QR code here on the screen, or you can DM us the word real estate and my team will get you out this free ebook. Again, it's completely free. Just want to get you this information so you can begin to get the bag while buying real estate. Stay blessed and holla at your button.
My whole thing is, one thing I hear a lot of the times when it comes to anybody in real estate is, I don't have the money or the credit or the time or the intellectual property. And I said, okay, no problem. I have the money, have the credit, have the relationships. I'll teach you how to locate a good deal, right? Buy below wholesale.
I love that.
And once I teach you that, right, I'll bring me the deal. I help you underwrite the deal, which is fine. I'll even fund the transaction for you as well. So there's no excuses on the table at all. That's why we call that the cash flow club, period. So what happens is people always ask me all the time, Dale, can you train me? Well, I don't have the time to do that. But what if I set up a platform for it to where you get on-demand training? Anytime you want to, because the training you may need may be after you get off work, early in the morning, during the day. You just log into your account and get the same training as if I'm sitting there one-on-one. We're talking about our attorneys, our general contractors, our appraisers, as well as me, talking about how to structure your business, how to put together what they call a power team. A power team is very important. How to put a deal together, right, and buy it at the right price point. How to market. That's one technique that people don't understand. That you can actually get a list of properties that from your city for free.
Whoa. So walk me through that. Like, you can physically get buildings or homes or properties available for free?
Yeah, I'll send you guys the bill in the mail. It's real simple. What you can do is you can actually call down to your city. and ask for the violations division. What happens is you say, hey, I want to see what homes in our city actually have violations. What are violations? High grass, no paint, vacant. You have boards on there. Those are actually violations that the city, or citation that the city has actually levied against that property. They'll give you that list for free. It may be a little bit of a fee, maybe $100.
Sure.
But it is what it is. Then what you do is you actually you can contact those sellers of those properties one-on-one.
Wow, and that's how you make your money.
That's one way.
That's one way.
That's one way.
If you'd like to learn how successful real estate investors make money when they acquire real estate, but not when they sell it, click on the link below, swipe up, DM me the word real estate to download our free ebook, Distressed Property Investing. The blueprint is in the ebook. Stay blessed. I'll let your partner and download the ebook today.
Bless God, give thanks. Bless God, give thanks. Bless God, give thanks.